Hello students, once again I welcome you all to the 21st video lecturing session on financial markets and services. We are in the second chapter, that is non-banking financial intermediaries. This subject is kept for the final year BBA students of Bangalore North University and Bangalore University as well. Moving ahead, so as I have already told you, it is the unit is non-banking financial intermediaries. In that, the topic that we are going to discuss in this particular session is venture capital investment process. That is the stages that are involved in the process of venture capital investment. So that is what we are going to discuss in another 15 to 20 minutes. So next we have got the quick recap of our previous class. So in our previous class we had discussed about the venture capital fund, the meaning of it, that is the meaning of venture capital fund, and we had also discussed the different characteristics of venture capital funds and the advantages of venture capital fund, investment in the venture capital fund. So you can go back to the video and you can just review it. The learning objectives of this chapter, so we have already read it out in the previous sessions. It is same for the entire units till the second chapter, sorry, till the 24th session for all the second unit sessions. So the session outcome, the students will be able to describe the venture capital investment process. You should be able to explain the stages that are involved in the process of investment in the venture capital. So moving ahead, we have venture capital investment process. In that, the very first stage is deal origination. So what exactly this step deals with? Venture capital financing begins with origination of the deal. Origination is nothing but inception or beginning of the deal. What kind of deal? For venture capital businesses, stream of deals is necessary. There may be various sources of origination of the deals. One such source is referral system. References may be given either by friends, relatives, or known persons, in which deals are referred to venture capitalists by their parent organization. Parent organization is nothing but there will be a mother company, or we call it as a parent company. It will have few other subsidiary companies. For the subsidiary companies, the parent company may provide the deals, business deals, or venture capital project deals. For example, previously State Bank of India was the mother company or the parent company, parent organization for all its 5 subsidiary banks like State Bank of Mysore, Hyderabad, Jaipur and Bikaner, State Bank of Travancore and State Bank of Patiala. All these 5 banks were the subsidiary units of or banks of State Bank of India. For all these banks, State Bank of India might have given the venture capital deals. Apart from parent organization, the source of deals, trade partners may also give, industry associations and friends. All these are the sources for the origination of the deals. Deal is nothing but the investment opportunity or investment project. Next stage we have is screening. What do we screen here? So screening is the process by which venture capitalist scrutinizes all the projects in which he could invest. So this is the picking process by the venture capitalist in which he wants to invest. So what are the criteria that he looks forward to invest in a particular project? Or the projects are categorized under certain criteria such as market scope, technology or product, size of the investment, geographical location in which the investment is going to happen, the stage of finance, whether it is for the very inception stage or in between the progress of the project or at the ending stage of the project. This also matters. For the process of screening, the entrepreneurs are asked to either to provide a brief profile of their venture, that is the ideology or the business plan which they have prepared, or they are invited, that is the entrepreneurs are invited for the face-to-face discussion for seeking certain clarifications and information, because the venture capitalist is the investor. He wants to safeguard his investment in terms of not getting into the failures. Okay, so that is what exactly happens in the screening stage. The third stage we have is due diligence. The proposal is evaluated after the screening and a detailed study is done. What is done in detail? Some of the documents which are studied in detail, like they are projected profile, track records of the entrepreneur. If that particular entrepreneur or the person one who has originated the idea of project, his track records may be verified. How many projects he has done before and what is the success rate, such things will be evaluated, that is taken care. Uh, Future turnover of that particular project. So all these things are sought by the venture capitalist. Certain qualities in the entrepreneur, such as entrepreneurial skills, technical competencies, manufacturing and marketing abilities. An entrepreneur requires technical knowledge, technical background for the manufacturing purposes, and for marketing purposes he must be having the managerial skills, the soft skills, or the marketing awareness. So all these skills are, you know, look forward by the venture capitalists in the entrepreneur. And along with these skills, the experience is also taken into consideration during this due diligence stage. The next stage we have is valuation or negotiation. The word negotiation is more fit than using the word valuation. So what is done in this stage? After the venture capitalist finds the project's beneficial or the project is beneficial, he gets into deal negotiation. What exactly happens in the negotiation? So the deal negotiation is a process by which the terms and conditions of the deals are so formulated so as to make it mutually beneficial. Both the parties, that is the entrepreneur and the venture capitalist, both the parties have to be benefited in such a manner. The binding rules are framed. Both the parties put forward their demands, and a way in between is sought to settle the demands. Some of the factors which are negotiated, so the factors that are uh, stressed more upon are like this: the amount of investment that has to be brought in by the entrepreneur and the venture capitalist, percentage of the profits held by both the parties. So that is what the consideration that is sought by both the parties: the consideration for the venture capitalist for investing his lump sum amount, and the consideration for the entrepreneur for putting his ideas, entrepreneurial skills, and many more. The rights of the venture capitalist and the entrepreneurs, these are also discussed, that is nothing but negotiated in the fourth stage. The fifth stage we have is post investment activity. So once the deal is finalized, the venture capitalist becomes part of the venture and takes up certain rights and duties. The capitalist, however, does not take part in the day-to-day procedures. So he is not more keen in the day-to-day activities. What he does, the capitalist, uh, however, does not take part in the day-to-day procedures of the firm. It only becomes involved during the situation of financial risks. The venture capitalists participate in the enterprise by a representation in the board of directors and ensure that the enterprise is acting as per the plan. So, in a nutshell, what a venture capitalist does post the investment is he ensures, or he's he makes the fact true that the enterprise or the business firm is going in accordance with the negotiated or the planned direction. And he also takes care, or he also represents in the board of directors as a token of his word or his presence. He also has a right to say either yes or no. He also has a right to put forward his opinion in the business decisions, or if there are any tremendous or significant changes that has to be brought in the project. So the venture capitalist has also got his say. So this is what post investment activity is involved. And the next stage we have is exit plan. The last stage of venture capital investment is to make the exit plan based on the nature of the investment, extent and the type of the financial stake, etc. The exit plan is made to make minimal losses and maximum profits. The venture capitalist may exit through IPOs, acquisition by another company, purchase of the venture capitalist share by the promoter or an outsider. So, in a nutshell, the exit plan is all about the venture capital investment is a pooled investment process, as we have already discussed it in the meaning. There will be minimum of two parties. There may also be more than two to three parties, but out of which certainly there will be an entrepreneur and there will be a venture capital investor. So once the business is started, the venture will be there only to the extent of the completion of the project. Sorry, there was a small interruption in between. So we were discussing about the exit plan. In the exit plan, I was telling certainly there will be two persons. One is the venture capitalist, and another one is the entrepreneur. So at the end of a particular project, that is venture capital, that is the venture, certainly there will be either the entrepreneur or by the venture capitalist as a owner. If not these two options, certainly this venture will be sold to some other third party by way of, we have the options. The venture capitalist may exit in terms of selling his share to the entrepreneur or to the third party, or the venture may be acquired by another company, or the purchase of the venture capitalist share either by as I have told you, either by the entrepreneur, or we also call him as the promoter. So these are the options to exit by the venture capitalist. In some cases, the entrepreneur himself may sell it to the venture capitalist, where the venture capitalist share is more and he is very keen in continuing the venture business. So these terms and conditions will be mentioned in the negotiation stage itself, if at all the case is like that. So these are the stages of venture capital investment process. Now we have arrived at the stage of multiple choice questions. So the first question we have like this: the source of deal origination includes, options are like this: entrepreneurs, management teams, promoters, all of the above. So these are the sources of deal negotiation. The next question, the right answer is all of the above. The next question we have is, dash refers to those activities concerning the assessment of the business and financial viability of the target investment. The options: deal screening, due diligence, deal structuring, and value addition. The right answer is due diligence. So this is concerned with the assessment of the viability in terms of various criteria, viability of the investment. So the third question: which of the following exactly define the meaning of mezzanine financing. The options we have got. It is a hybrid of debt and equity financing. It is the highest risk form of debt, but it offers some of the highest returns. It allows companies with less collateral to secure funding for growth. The last option is all of the above. The right answer is all of the above. So all of the above options reflect the exact the meaning of the characteristics of mezzanine financing. The fourth question we have is, which of the following are the different routes for the venture capital exit? That is the IPO, that is initial public offering, the conversion of the private company into a public company. Next, promoter buyback. So the shares of the venture capitalist is bought by the promoter, that is entrepreneur. Mergers and acquisitions. Some other companies will come and merge together and form a new company, and the acquisition size, some other new company will come and acquire, and the name will be of the buyer company. This is acquisition. The last option is all of the above. Probably the right answer would be all of the above three options are suitable to exit the venture. So the right answer is all of the above. Then the fifth question we have is, which of the following is considered to be the father of venture capital? So first option is Deriot. Second option is Modigliani. So third option is, that is option C, is Waghul. The option D is Jimmy Carter. So let us see who has founded this venture capital. So it is Deriot. So he has founded the venture capital idea. So here we end with, these are the references, the source of information and textbooks which I have referred. You can also refer these books, and yes, we will meet in the next coming sessions. So bye, take care.